Hi everybody, this is Big Luca. I'm one of the highest paid online marketing consultants in the world, and the combined revenue of my clients is a lot of hundreds of millions of dollars. And today I would like to teach you how to manage your money as an entrepreneur and how to become rich and wealthy. So I have my whiteboard here, which anytime you see me with a whiteboard, you should just be scared because a very in-depth explanation is coming. You see the whiteboard? Yes, you should be able to read it. So, I produced a video about how to get wealthy from your company, and I've explained to you the importance of getting dividends, okay? So to take money out of your company as you go. And some people didn't really understand the video, and they've asked us a lot of questions. And I know this is a very sensitive topic in pretty much all countries in which you pay taxes. Now, in countries in which you don't pay taxes, like Dubai for now, because recent news, they're introducing a 9% corporate tax rate from mid next year, right, from June. Anyway, it will be 9% on corporate profit, go figure. So in countries in which people don't pay taxes, nobody has a problem understanding what I'm about to explain you. But in countries in which taxes are present, people are very wary of taking money out of the company. And so they don't really understand the relationship between your operational company and your personal wealth. And that's today's topic. I would like to really help you on this. First of all, if you keep all of your money in your operational company and you don't have any money, you're broke. Okay, I really want to bring this kind of teaching back into the US market, and I've been teaching this forever, that rich people have a lot of money, right? Let's just stick to this very basic definition, okay? You cannot be rich or wealthy if you don't have a lot of personal wealth. You're not personally wealthy if you don't have personal wealth, okay? And wealth can be in various forms, of course. You can have liquid money, you can have a brokerage account with shares and securities and stocks, essentially. You can have real estate, you can have watches, but they need to be separated from the operational companies that generates them. So what people do is that they have a company, all right, and they sell whatever, right? And I'm sorry to say this, but it's just the truth. Very stupid people, what they will do is that they will kill their profits. They will live off the company credit card. They will never have actually any money, any liquid cushion, not even an emergency fund, okay? Or maybe they will have that maybe 3 months in their personal bank account, but no more, right? Nothing more. And what they will do is that they will have a company. They will kill the profits by spending money and by putting expenses on the company. They will brag about it. I'm very serious about this. And they will, at the end of the year, they will not have made any profit. And so they will brag about with their friends about not having paid a lot of taxes, right? So there is no excuse for this. It's just, you don't have any money, right? I don't care what you say. Actually, you have a very lifestyles. You have expenses, but you don't have a net worth that generates the money for your lifestyle. So first of all, you don't have passive income. I don't care how automated your operational and active company is. You don't have any money, you're in trouble, all right? I'm not even going to explain to you why. You've got to understand this. If you kill your profits, you don't have any money, and you hope that your company keeps spitting out cash, which then you spend and nothing is left, this is a recipe for disaster, and this is a recipe to be broke. So I'm not even going to consider that. That is not a viable solution. So people will say, so we're just going to put those people aside. What some people will do is that they have a company, right? And the company has a bank account, of course, let's suppose it's one, and they make a lot of profits, right? So they will pay their taxes. They will say, well, listen, I can pay 20. It depends on the state you guys live in, if you're from the US. But usually around the world is about 25 to 30%. Okay, so let's suppose 30% corporate tax, right? So if at the end of the year you have 1.3 million, you will end up with actually $1 million, right? Give or take, okay? And so they have $1 million in the bank account, right? And they will say, if you ask them, how much money do you have? They will say, I have $1 million. Now that does not happen to be true. The reason we use a company which is an LLC, limited liability company, is that you are not the company. That is the whole idea, okay? please repeat this to yourself. I know this is hard, but you are not the company. Okay? The company is separated legally from you. And the company replies and handles attacks legally wise only with the money contained in the company, because it is a separate legal entity. So if you have $1 billion in your bank account and somebody sues you for 2 million and the company bank account has 2 million, the whole idea is that they will bankrupt you. Maybe you will give them $1 million and you will shut down, or you may produce more cash flow and replenish the bank account, but you get the point. But you're still a billionaire, right? If you attack the big Luca International Consulting, I'm still rich. You can bankrupt the company if you want. I hope you don't, but I'm still rich because I have the money. So this $1 million is not yours, it's your company's. Okay? Now people may say, well, but I own the company. See, anytime you do something which you know is wrong, you try to come up with excuses. Like, I don't have to give reasons why I have money, because I have it. Like, the mere fact that you should say, well, okay, it's in the company, but I own the company, but you have to come up with all these bullshit explanations, is that you know it's not your money, right? It's just not, legally wise. By the way, you can't use it for your personal lifestyle. In certain states you can, in certain places of the world you can, so you can put your personal residence on your company. You can put your yacht on the company. You can put your personal Ferrari on the company, but mostly you cannot do it if they're not business related. And of course, at this point, people invent, it's actually fraud, that they're business related, because how are people going to find out? How is the taxman going to figure out that the dinner I'm putting on the company credit card was not a business dinner? And that may be true, but it wasn't. Like, can you see that we're delaying and putting layers of bullshit between us and our money? Okay, so there's $1 million. That $1 million legally should be used to pursue the company incorporation premises. Okay, I don't know whether that makes sense or not, but when you create a company, this again is different if you're in Dubai or if you're in the US or if you're from the UK. But the company is a reason to exist, which is usually written down either by a notary or by whoever creates the company. And so if, for example, you have a holding company, that company is not transactional, because that is not what the company does. And so you cannot use that money to go in and wire money out to your family members, because that holding company should only hold your assets. Okay, does that make sense? Or company assets, which, by the way, I will explain to you the difference between holdings in a second, because that's very important. It goes back to what we're saying. So with that $1 million, it's not true that you can do anything you want. That is not the case, right? You can buy Facebook ads, you can do marketing, you can buy a big Luca International Consulting course, because you will say, well, I have business, so it's a business expense. But the target is not to have a lot of business expenses. In what world are we trying to get rich? By having a lot of expenses. See, this is the biggest conspiracy, right, against people in countries in which you pay taxes. Because taxes are so high that all of a sudden your target is not to get rich, but it's not to pay taxes. And unfortunately, the only way not to pay taxes is not to have profits, which means you don't have any money. When people say, last year I didn't pay taxes, they have basically revealed how much money is sitting in their bank account, which is nothing. Okay? Because otherwise you would have paid taxes. I know that people play with silly systems, so they will say, well, I invest the money before they tax me. That is okay in order not to pay taxes, and that is not stupid. For example, if you accumulate real estate, but you're taking the money out anyway, so the target is taking the money out. I would not get too technical on this, even because I'm speaking in English, and of course this video is going to be watched from the US, from the UK, from Ireland, and you guys don't have the same system. So I want to keep this as quote-unquote general as possible. Just learn the principle and then you apply it to your case. So you have $1 million in your company, which is not your money. Sorry, it's just not. Okay, it is your company in Dubai, because in Dubai there is no taxes. You can take the money out, you can keep the money in the company, you can, because there is no taxes. So you can put it in your personal bank account, or you can keep the money in your company, but you can dispose of it as you please. You can wire the money out to your mom, right? from your company, but nobody asks you because there is no taxes. Again, taxes are going to be introduced, so this will change, but for right now, it's not. So you have $1 million, and people will keep the money into the company and never have any money. Now, there's a number of problems with that. First of all, you need to ask yourself, why do companies go out of business? Because companies go out of business, right? Very big companies fail, your little companies may fail as well, okay? So if the company has a problem, you need to spend this money for the company in order for it to keep generating the money. But if you keep reinvesting it, you're always at zero, which is not the target, because if you have zero money, you're not rich. You have to get very comfortable with this idea. Okay, I know that for years people have talked about how rich people don't have money, right? They just have assets, they just have real estate, and first of all, it's not true. You need money, right? Have liquid money. Just listen to me, please. Because when you have problems in life, you will pay money, right? Try to pay with other things. So $1 million in your company is not your money, and so you don't have any money, right? So what some people will do is to create a holding company, right? And usually people do all of this, again, to mitigate taxes. So the fact that their personal wealth is 50 grand doesn't really concern them so long as they're not paying taxes. And at the end of their life, when they're 50 and 60, they will realize they were wrong, okay? So $1 million will go to the holding company, which, by the way, is not an holding company, is an operational holding company, all right? Operative holding. Let me just tell you the difference. Let me just switch on the aircon because I'm dying here. Okay. So guys, all right, am I in focus? Yes, maybe, maybe not. Just do this. All right, okay, bear with me. Yeah. Okay, so they will create a holding company which holds the operational company, right? And they, of course, will feel extremely smart in doing this because they have a holding company, right? But it's actually an operative holding company. What does it mean, right? It's operative in the sense that it holds assets, but it doesn't hold your assets. Why does it not hold your assets? Because it's not your assets. We just said it. It is your operational company assets. So the whole purpose of a holding company which owns the shares of the operational company is to do a few things. First of all, to protect the cash of the operational company in case of a lawsuit. Because theoretically and also practically, if somebody goes after your company, they cannot go after the holding company. So you will put $1 million into the holding company, and if the operational company needs the money, you will do what's called a cash pooling operation. So the operational company will literally pull cash out of the holding company. This is also a group holding. You hear about groups, right? So there is a company which holds the shares and the stakes on maybe multiple companies which do business. So for example, the Big Luca International Consulting Company is a company I own. I have another one which is called Big Luca Agency, which, by the way, if you guys are interested in done-for-you services, you should check the company out, right? It's an active company, right? It's earned income. Don't call it passive income, please. And so the older company will have agreements with the operational companies, which can be, 1, 2, 200, doesn't matter, with a cash pooling operation. Right? This holding company protects the operational companies. It is not your money. Still, money has not gone from the company to your personal bank account. Again, people will question, say, well, but Big Luca, I pay taxes. That does not change the principle of the fact that you're broke, right? So I had a guy, he was having a lot of problems legally wise, and he had about $3 million in the holding company because it had generated money from the operational companies, okay? And somebody sued him. He spent all the money. So he came to me. He was like, I don't have any money. And of course, I joke with people in order to make points. And I was like, can you describe? I was like, how do you mean you don't have any money? The company has gone out of business. How come you don't have any money? And he was getting it. So he was like, well, I don't have any money because I had a holding company and blah, blah, blah. And I was like, oh, well, then you never had any money It's not like you lost money, you never had any. And he wasn't getting it. I was like, it was not your money. Have you not figured it out? It was not your money. Your money should have been segregated from the operational part of your life. So guys, you really have to understand this. Don't get these things mixed. You have operational company. He may or may not have a holding company on top. He produces money. That money needs to go. You need to cut the ties from the operational side of the business, and then it increases your net worth. You want to have a real net worth which is not tied to your company. Of course, your company will theoretically increase your net worth. When you hear people say, I have a $50 million net worth, I have a $200 million net worth, they don't. They have a company that maybe turns over $10 million and they will say, I have a $60 million net worth. They do not. Their company may be empty. And they say, well, if I sell it for 10x, it's all theoretical. But you're not going to buy, stuff with your theories, and you're not going to have a happy retirement with theories. You have it with money, which in my school is a cash-based financial security. No debt, lots of liquid assets. Okay, and then you can buy real estate later on, right? So you need to cut the ties from your operational company, and you need to put it in your own net worth, so in your own name. Now, you may have a holding company for your personal wealth, but it's not the same holding company of the operational holding company. Because this holding company just owns money from the operational companies. Its purpose, for example, it's not to invest. People will say, I invest out of my holding company. It's not your holding company. It is your operational company's holding money, right? So, for example, let's suppose it's just one. It's not, it's small, but I have a financial holding, right? Which doesn't have anything to do with the other holding, which, by the way, I don't have this holding. I just have operational companies, right? I don't need a holding company for my operational companies. But if I did, that would be called the Big Luca Group, for example, because it holds companies under the name of Big Luca, right? So this, for example, this holding company is in a country which is different from the operational companies, right? Don't keep your assets in the same countries you do business in, for example. So if something happens, you're protected. Okay, of course, declare all of your assets, all right? Don't avoid taxes. This is not one of those videos. Okay, so you have financial holding. This company does absolutely nothing but hold my brokerage account. It doesn't have underneath an operational account. You don't want to mix the two things. This is a very important, first of all, asset protection strategy. But it's not just asset protection. You want to be in a situation in which you can dispose of your money as you please. You don't have to create fake invoices. It's just the reality of it. 200 grand to your mom, and that's a consulting session, right? Right. You don't have to borrow from yourself in order to repay yourself with the money you're running out of, because otherwise you wouldn't have borrowed money, and you don't want to do any of that. So the financial holding, which holds your bank accounts and your assets and your real estate, is a different holding company from the holding company that holds your operational companies. And if this is confusing to you, I have one word of advice. In the money game, you need to know the game. And the game is not to be poor, right? My mind. And there are things you need to understand about this, right? So it's complicated, but you got to do it. I have about $1 million in my operational, but you don't have any money, darling. That is the company's money. The company needs to pursue its mission, which is selling a lot of courses. So if you need money to buy something else, you don't have it. And you want to be in the happy situation in which your net worth, let's suppose it's a brokerage account, holds, let's suppose $10 million, which is not leveraged, it's not pledged, it is not borrowed, it is not a contract of money lending between your operational company and something else. It's just liquid thing that gives you, 500 grand passive a year. This is what's really passive. People talk about passive income and they want to make passive income from an active company, from earned income. It's silly, right? So 500 grand coming from $10 million. Let's suppose you withdraw 5%, which you can do, no problem with index fund. This is real net worth, real passive. The company can close tomorrow because it's separated. So tomorrow I close the big Luca international company. I still have a lot of money because it's my money. It's not my money if it's my company. Okay? This is very important. Okay, I can't stress this enough. So I hope this explanation is clear, and just make a comment, give us a thumb up, and yeah, that's it for now. Thank you.